Hey, what's up guys? Today we're going to talk about protected swing points. Now, what do I mean by protected swing points? Now, what I mean by protected swing points is prices creating, for example, higher low, higher high, higher low, higher high. Now, if you look at this, currently, obviously, this is a bullish move to the upside or a uptrend since we're creating higher highs, higher lows, higher highs, higher lows. Now, what I mean by protected swing points is points where price shouldn't go below on. Because again, why don't we want price to go below from this point? Because again, we are expecting price to continue to the upside, right? Since we overall, from past history, we are overall in an uptrend. Now again, if price doesn't, we want price again to not break this. If price breaks this, there are two ways. Either it's a liquidity grab. Okay, let me just erase this. Either price is just grabbing liquidity from this below, then continues to the upside. That could happen. Or either this is now a shift to the downside, meaning it broke this structural point over here. Now price wants, or the overall market order flow now wants to shift to the downside. Now, protected marking up your price or your markups with protected points and target points helps you to not get overall biased or too much biased with your analysis, and it keeps you reminded with where points should hold or where price should not break and hold. Because again, what I mean by protected points is we have this. Now currently this is the protected point. Then let's say price shifted on lower time frames, it shifted to the downside. Now this is our target point, this one over here. Protected, target. What do I mean by target? Since overall we're in a bullish move to the upside or we're in an uptrend, obviously we're expecting price to continue to the upside. Hence, that's why I named this target or a target point, because we're expecting price to move to the upside. So it's more probable, even though price is currently, let's say price is currently here, even though price is super near to this low point here, it's still more probable for price to break this point, since overall in the past history we're in an uptrend. So target, protected. Now target meaning we're expecting price to break that point, this liquidity point, liquidity high here, and protected meaning price should not go below from this point, since if price goes below it, now this could be a liquidity grab to the downside, then price then continues to the upside, or this could be a overall structural shift now to the downside, since price might be done going to the upside. But since overall we're in an uptrend, so we should focus for price to continue to the upside, for price to create another higher high, higher low, and higher high and higher low. So we can mark this up as a protected zone and the target zone. So another great example is currently EU for the past couple of days. So let's just start from this point here. Again, do your back test, do your research. Don't take my word for it. You need to have confidence in these concepts or speculations towards the market, or the concepts. But again, so what do we see here? Let's just start from this point over here. Let's go to the 1 hour to make time quicker. What do we see price doing? Lower low, lower high, lower low, lower high, lower low, since price broke this structural point over here. Break of structure. So lower high, lower low, lower high, lower low. Now, where is price more probable to go to? Of course, lower, since overall we're in a bearish move to the downside. So we're expecting price to do a pullback to either this zone to come mitigate some supply zones, then continue to the downside. Even though price is super near from this point. So we have this point, protected point, and target point. Since again, we're talking about protected swings, so we can mark this up. Let's just mark this up as the protected and the target. So we have the protected and the target zones. So price, either the reason why we shouldn't want price to break this protected zone is we want to continue to the downside. Now again, if price breaks this protected zone or protected lower high, then either a liquidity grab, then continues to the downside, or a overall structural shift to the upside, or the order flow shifting. So now obviously we don't want price to break this protected swing, and we also marked up this target over here because we want price again to continue to the downside, hence following the historic pattern it's giving, since we're having lower highs, lower lows, lower highs, and lower lows. So we can mark this up as protected and target zones. Now if we play price, as you can see, it broke the structural point over here, or this lower high over here. Now we can ask ourselves, why did price break that? Is it either a liquidity grab or a structural shift to the upside? Now the most probable thing is for at this moment is to shift our bias, since overall again our bias is to the downside, right? Since price broke the structural point over here, break of structure, now we're expecting a shift. Since it's a lower high, now this could be a higher high to then continue to the upside, hence having a order flow shift to the upside. Now instead of this as our target zone, we now shift this point to a protected zone. So we can just mark this up, this tool here, protected, because we want price, we don't want price to go below this point. So how do we use, or how can we benefit from marking up this protected and target zones? Obviously, if we now have a protected zone here, we can look for POIs within above this zone. Since, let's mark out, for example, this is hindsight, but again, let's say there's a demand zone here. Since we have a protected zone, it's more probable for price to bounce on this point and not go lower, since we marked it up protected, or we see the order flow as a continuation or as a shift to the upside, hence breaking this structural point over here. So that is how we utilize it, or how we can use this protected swing points. Then let's just keep playing this. Now this could be our target. Let's just replay this. We can mark this up as our target, but again, we can mark up this as our target, but again, we don't know when price will actually stop creating the higher high. What I mean is, we don't know, price might continue to the upside, continue to the upside, continue to the upside, maybe here, then do a pullback, then continue to the upside. We don't know where's the end point of this creation of higher highs. So what we can do, what I do as to make a systematic a rule base that is systematic, is I use a fib tool, and I want price to make a pullback to the 50% for me to consider it as a healthy pullback. Now when I see a healthy pullback, then I can mark it up as the target zone, that high over here, for example. So we can then expect price to continue to the upside, since again, if you did some research, we know, or we expect that if price goes to the 50% of this overall swing point move, either this is a larger demand zone or it's just a healthy pullback. Now we can technically mark it up as a target, but again, if we use the fib tool, it didn't make a healthy retracement to the upside. As you can see, this is what I mean. We don't know where is the end of the high point, so we can move it again. Play it. Now we can move our fib tool to this high. Now we just wait for price. At the same time, we can look for POIs over here, for example, either on this 50% or lower here, a more refined one over here. I took one with the group. Everyone made profits, made a beautiful trade within this demand zone over here. As you can see, you see price go lower, consolidate a bit, range a bit, then tap in. There's a more refined zone, but I digress. As you can see, price tapped into it. Now, as you can see, again, we see price go into the 50% of my fib level, meaning I consider this as a healthy pullback. At the same time, it's tapping into this demand zone I marked up, meaning, oh, this is a valid reason now for price to continue to the upside. This is now when I mark up my target and my protected. Again, we have this protected low over here. Why do we mark this up as protected low? Since we're overall in an uptrend. Again, if you still don't get it, if you see this, now this is our protected low. Price does a pullback to come mitigate demand zones. Now we can have this target and continue to the upside. Now after price hits that target zone over there, now we can move our protected markups or our protective ideas to this point over here. Since we want price to continue to the upside, price does a pullback, come mitigate demand zones, continues to the upside, hitting our target or the liquidity high, then we move against our protected low over here. Now if price breaks the protected low, now we can shift our bias to this as being the protected high. Price continues to hit our target low, then hence following a order flow pattern. And again, as you can see, we have our target, our protected low. As you can see, price broke that point over here. Now this is the same thing that what I marked up here, moving our protected lows after it hits target. Now we hit our target. Now we move our protected low again to this point. Since we already hit our target, now we move our target to at the same time at the highest point of this move over here. So again, we don't know where is the highest point. At the same time, we can use the fib tool. At the same time, we can look for certain demand zones. As you can see price went higher, so we can move our target zone higher and at the same time move the fib tool higher. Price tapped into it. Then currently we're at this point. So again, this is the same idea with the target and the protected zones. As you can see, let's just play price. I believe price is now below. So currently at this moment, we are still here. So again, doesn't mean price went below the 50% or this certain demand zone here. Price is now shifting to the downside. Again, we still have marked up protected swing points. This is our target, this is our protected. If price breaks this lower, then we shift our bias to the downside. But if price still doesn't break this protected though, overall, our bias is still the same, that price wants to continue to the upside. Again, we are just following footsteps, or yes, footsteps. We cannot predict the market. So what we can do at this moment, if we see this push to the downside, going below from this demand zones over here, at the same time we took some beautiful trades over here, scalped it, I believe to this high and somewhere here, some supply zones. But anyways, the possible reason why price went lower is, again, there could be a more refined demand zone here. At the same time, this could be just another healthy pullback to the 78% of this fib tool over here. So again, doesn't mean price went lower from the 50% of this overall swing move. At the same time, goes below from this demand zone. Doesn't mean it did that. We are now shifting to the downside. Again, overall, we're still in a bullish trend since we still haven't invalidated our protected point. Unless price taps it, then obviously we're shifting to the downside. Hence, continuing the overall larger time frame structure, bearish move to the downside. Again, this applies to lower time frames. What you can do is, currently we're in the 1 hour, or this could be seen on the daily or the 4-hour chart. Again, what we can do, what do we see from this point? See price. Let's just mark this up protected. Let's just go here. So this could be our protected point here. Oh, wrong tool, my bad. So we can have this as a protected point over here. Then our target point over here. Why do we have our target low here? Because again, as you can see, what what did structure do? Structure or price broke this low point over here, because currently we see this on lower time frames. Okay, on lower time frames, lower low, higher high since it broke the structural point, higher low. It fails to make another higher high. It didn't go higher from the previous higher high. Breaks this lower high. I mean this higher low, my bad. Breaks this higher low. Now we are expecting a shift to continue now to the downside, or to follow this overall schematic over here. I mean schematic, the order flow. You can see, let's just mark this up. Protected target. Why again do we have this protected? Because overall we broke structure, specifically on lower time frames. We broke structure, obviously protected, and target. As you can see, we can grab our Fib tool to differentiate a good pullback. As you can see, doesn't mean, okay, here's the thing again, doesn't mean price didn't tap the 50% of your Fib tool, or this overall move over here. Doesn't mean this doesn't count as a healthy pullback. Again, price doesn't, it's not required to do a pullback on the 50% of this move. It could be near the 50%, but it's not required to go to 50%. What I do is protected target, as you can see, tapped into the target beautifully. Now we shift the target here. At the same time, we shift our protected zone here. Now we're expecting price to do a pullback, then continue breaking the target. Either way, at the same time, again, this is just storytelling. Why is the lower time frame creating a bearish move to the downside? Because if we zoom out again, overall, remember, we still have this target and protected. There could be a more refined demand zone here. Hence, that's why price broke this structural or created a push to the downside. As you can see currently, we see protected a target. This could be a healthy pullback now, then to continue to the downside, maybe tap a more demand zone, more refined demand zone, or either what price could do is maybe there is I believe the demand zone was here higher. As you can see, price tapped into it. This is a more refined, unmitigated demand zone over here. Now we could expect now price to break this protected point, since it's probably done mitigating the lower points over here, the lower demand zones. Hence, this is why price went lower. Now, if we see a price break this protected point, now we can shift our bias to having this is our target. Let's just draw this out. If price broke that protected point, now we can shift instead of this is our target, our target, we can now shift it. This is our protected, now this is our target. Now we can expect price to do a pullback, then continue to the upside, hence following the overall structure or the larger time frame structure. So I hope you guys learned something. If you don't, comment down below or DM me on Discord or whatever. But I hope you guys learned something. So thanks for watching. See you soon.